We live? All right. So thanks for coming out. Look forward to having this conversation or having these guests up talking about multifamily real estate. Not only are they very experienced, and I think several of you know the guests or I've worked with them in the past, but not only are they very experienced with real estate investing, they have very unique strategies on how they actually approach real estate investing, which is going to offer you a good perspective as we have the discussion tonight. But first, before we get started, I want to thank Quest Trust Company for letting us use this room. They've been a tremendous and just a great collaborative partner over the years. We got Colin, he's going to come up and talk a little bit about Quest.
Yeah, all right, hi everybody. Thanks Chris for the introduction. Like I said, my name is Colin Taylor. I'm here with Quest Trust Company. This is, you've probably seen our logo maybe around the room. This is our building here, our classroom space. But I just wanted to talk to you guys a little bit about what it is I do, what Quest does, how I may be able to assist y'all. So we are a self-directed IRA custodian. Essentially what that means is we enable our clients to use their retirement savings, their 401ks, IRAs, 403bs, whatever your employer plan is or anything like that, you name it. We can help you use that money to invest in multifamily, like what Chris is talking about. I talked to some syndicators, some guys in single family, anything like that, oil and gas investments, lending on a note, promissory notes. That's what we do. So I'd certainly love to have a conversation if anybody's interested in that. I've got some business cards and little consultation sheets out on that circular table just right outside the door. So please take a card, leave a sheet overnight. I'll get in the morning and be happy to talk to you guys. One other thing I did want to mention as well, just before I hand the mic back, is the Quest Expo. One of the biggest real estate conferences in the country this year, coming up just here in about a week and a half. It's not this coming weekend, but the next, so the 23rd through the 25th. We're having all sorts of different, real estate, alternative investment experts come in to talk to you guys, tell their story, do Q&A, network, all that sort of stuff. Emmett Smith is one guy that's going to be there. He's a big real estate investor. If you guys don't know who that is, he's a Pro Football Hall of Famer, played for the Dallas Cowboys for a long time. But just let me know. I'd be happy to. Typically, the general admission tickets are $250, but if you sign up or get in touch with me before the end of the week, I'd be happy to take $100 off of that. So just let me know if anybody's interested. Like I said, my name's Colin. I have business cards out on that table. So thanks everybody.
Thanks Colin.
Yeah, absolutely.
Anyone already going to the expo? Anyone? I'm going. It's really good. Highly recommend going.
We're gonna have 800 plus people there. Is kind of what we're expecting right now, and hoping to grow that in the next week or so.
Yeah, the content is rich. The networking it's pretty rich too. You're gonna get a lot of high quality folks there. Everyone is going. You don't pay that much money to go to an event unless you're pretty active or you've got money to invest with people who are active. So definitely recommend going. But a little about me. My name is Chris Bounds. I have flipped around 200 houses over the years, my wife and I, and we've raised over $19 million from individual private money lenders and equity partners to do that. A lot of them have been Quest clients. Also licensed real estate agent with eXp Realty, have over 200 agents on the team across the nation, and actually across a few different countries now, that are, a lot of them are real estate investors, or they focused working with investors. So if you're a real estate agent, you want to work with a investor focused team, and be happy to talk to you about that. But primarily what I do is I help folks build wealth and passive income with real estate through real estate investing in one of two different ways. Either teaching you how to be do the active side of the business. That's actually going out there, looking at deals, analyzing deals, raising money, closing deals, doing the rehab process so you can put a new property in your rental portfolio or flip it. That's the active side of the business. Or for those who just want to be more on the passive side, invest in your money and just sitting back and getting that constant return on an asset secured by real estate. I do that as well. So you can learn more about me at investedx.com. Do a lot of events just like this and work with people all over the country. But you didn't come here to talk about me, to listen to me talk about myself. We're here to talk about multifamily investing. I'm going to bring up two guests, and I'm going to let them introduce themselves. I'll prompt them to do that. So let's go ahead and bring up Ben Suttles with Disrupt Equity, and Boris Sanchez with Sandmore Investments. Do you have someone out there?
I think so. I think I saw somebody out there.
Okay. Mind checking the door, Ben? Appreciate it.
Well, thanks, Chris, man. We appreciate the invite.
Absolutely. So, go ahead and introduce yourself. You were on the mic, Ben. Go for it.
All right. Well, thanks everybody for coming out. Obviously, Tuesday night, you guys can be with families, but you're out here, talking to us and listen to what we have to say. But Ben Suttles, managing partner of Disrupt Equity. We syndicate and develop multifamily projects here in Houston, as well as throughout Texas, Georgia, and Florida. Currently have about 3,500 units bought and sold, close to 5,000. We have a property management company, we have an insurance company, we have a financing company, so we're vertically integrated as well. Raised close to $200 million at this point, and looking for our next project. We're not gonna be scared by inflation or interest rates, and I'm sure Boris was gonna say the same thing, right? Like, there's deals to be had in every part of the market cycle. You just gotta pencil them in correctly and just, obviously just have the reserves ready to execute on that business plan. But excited to offer some value tonight.
Thank you. How about you, Boris?
Hey guys, I'm Boris Sanchez with Sandmore Investments. We really are two different companies in one. We're owner-operators of 500 units and thereabouts, another 235 units of self-storage. And on the other side, we have a brokerage, right? So basically the premise of Sandmore Investments is we train folks like you guys to actually invest in yourselves, not crowdfund, not take everybody else's money. Sorry, man. And we talk to each other all the time, and I'm like, every time I say it, I feel bad but honestly, we agree that it's just two different styles, right? So so I'm more active, like owner investments, 100% owner. I have obviously a theory that I think that'll get you to wealth generation faster. And so, I'm excited to share this with you guys, share my knowledge, and come up to me and ask me anything you'd like.
And I do want to just make a note. Boris is somebody that I've looked up to for quite some time. I love the strategy that he has. I think that, like he said, there's just two different ways to kind of go about the business. Doesn't mean that one's right or one's wrong, right? In fact, and I've had candid conversations with Boris that I want to do more of our own stuff. Me and Ferris who's the other managing partner of Disrupt Equity, are actively looking for our own deals too, right? So, just don't come with an open mind, think about it, and figure out what's best for you and your family and your investment goals, right?
See, with that rich diversity is already coming out. So, here's how it's gonna go tonight. I've got a few questions. I'm gonna kick it off. So for first 20 minutes or so, I'll ask some questions, but you probably came here with a question or two in mind. Keep that in mind, write it down. They may say something actually that prompts like a follow-up. So if they say something you're like, I want to hear more about that, like write it down, put it on your phone or whatever, and then the last 20, 30 minutes or so, it's going to be y'all. You've got the opportunity to ask this question, so use it wisely. Let's kick it off though. How does the real estate market look for multifamily today?
I'll go first. So, man, it looks really bad. Oh my gosh. See Robert Kiyosaki talking about maybe crypto is actually going to come out on top. Maybe. I don't know. The guy from that movie, the guy with the glass eye, he's a genius, and he was talking about there's going to be a huge crash. It seems
the Big Short guy?
The Big Short guy.
Yeah.
Michael it seems to me every time that these guys talk, and then they put fear into everybody. Oh, here you go, it's all gloom and doom and stuff like that. We find more deals. Actually, we're finding more deals right now. We were finding more deals than in the first quarter of 2022. I think that's because everybody's just kind of like very in tune with like rising interest rates and stuff like that, especially sellers. If you own multifamily, it's your value is going to change a little more fluidly than in residential, right? So you always kind of want to know, okay, how much is my property worth? And maybe, it doesn't obviously change as much as stocks does, but it certainly does go up if, let's say, if cap rates compress, your values go up, or maybe if a neighborhood turns out to be better than others, then obviously that's going to make property valuable. So it's actually very fluid, and sellers are very in tune with how much their property is worth. And so when they start thinking negatively about their own properties, it's the time to strike, right? Like I always say, it's always a good time to buy a good deal. So we were buying in the height of 2019, we were buying in 2020 and 2021. It's just we were finding good deals, right? And so I think it just takes a little creativity in financing and in rehabbing and owning so that you can maximize the value of your property. Yeah.
And I was gonna say financing is probably key right now, right? You know, I mean, I think what people need to realize, what we do, it's all relationship driven, right? So you have to have the right team, you have to have the right vendors in order to be able to execute. But I think that the fundamentals are still there. Yeah, who knows what the time's gonna tell, if there's gonna be a recession, how long is it, how deep is it gonna be? Nobody really knows, nobody has a crystal ball, right? But as Boris has mentioned, right, there's always good times to find a good deal. Right, so you have to underwrite to interest rates that are elevated, right? And you just need to account for that. But the one thing that's helping the market right now is rents are also going up too, right? So they kind of offsets your expenses going up because your revenue's going up at the same time. And in most cases, even higher. You know, yeah, my interest rate's gone up 200 basis points, but you know, instead of 5% rent growth, I'm seeing 15 to 20% in multiple markets. So you got to take that into consideration. But the one thing that really helps investors out is buying in the right areas too. Right? So we invest in Houston, we invest in Texas, we invest in Florida and Georgia. That's just not because I'm just, you know, throwing a dart at a map of the United States. It's because there's population growth there, there's job growth, there's typically, you know, landlord-friendly and tax-friendly laws that kind of help, you know, make the investments and juice the investments. And those are things that you guys need to look at when you're investing into real estate, right? It's all about location, location, location. And so you invest in the right markets, and that's going to also help offset any kind of macroeconomic issues that they might be trying to, you know, the doom and gloom of the news cycle, it's daily, right? You know, doom and gloom sells. It's not all going to be sunshine and rainbows, right? Because nobody's going to be tuning into that. They want to show the 1,000-point swing on the Dow and all that stuff too, right? And I'd also say that you know, for people that look at that stuff and like maybe you got a stock portfolio, and I get that you have the diversification, right? It was already a little bit inflated as it is, so maybe we're kind of getting back down to the levels where it should have been, right? So there's a little bit of a contrarian view, you know, take it for what it's worth, but you know, don't believe everything that you hear in the news, right? There are some good fundamentals that are still happening in real estate, in the economy, and multifamily.
Yeah, a couple other fundamentals I'd like to point out is, you know, with less buyers out there getting priced out of the market, they still have to live. Now, if they own this is mainly for first-time home buyers. They're going to be renters. They're going to be renters for longer, and there's a lot more renters behind them because millennials are just now getting their home buying age, but they're not buying. But you've got Gen Z. So millennials have been the largest demographic in American history, and Gen Z is right behind them. The oldest of them are 21 years old, and they're even bigger than millennials. Like there's a ton of demand coming onto the market, which is good for landlords. So if you were getting started in multifamily today, in this market, how would you get started? Ben, you want to?
I mean, I'd say you're here. You're getting yourself educated, right? You're networking. I think, you know, don't go into these things blindly. There is a fair amount of risk in what we do, you know, but you can mitigate that risk by getting yourself educated. And when I started off 10 years ago, there wasn't nearly the amount of education that's online, the podcasts, the webinars. I mean, look, hell, we're live streaming this right now. People are getting content that I paid tens of thousands of dollars to attain through masterminds and training programs and just, you know, mistakes that I've made throughout my career, right? So you're living in a great age right now to learn how to do real estate investing and learn it fairly cheaply, I'd say. So start there, start networking. Like I said earlier, you know, it's all about relationships. And this summer, if it told me anything, it validated that statement. You know, there was deals that could have collapsed if I didn't have the relationships that I have in this business. And there was a lot of deals that blew up, right? You know, I mean, if you don't have the right lender or you don't have the right title company or you don't have the right investors, they're going to bail at the first sign of trouble. And hell, let's be honest, you know, May, June, I mean, things were getting real dicey real quick. I think everybody's kind of getting used to it, but even news today was pretty bad, right? So if you don't have good relationships, those people are going to pull the plug and then you're going to be left holding the bag. So developing those relationships by doing networking is important too. I mean, that's why we're out here, right? I mean, we still network. We still like to get ourselves educated. It's an ongoing process. So that's how, if you're getting into the business, that's where you need to start.
Yeah, absolutely. I agree. I think, if you wanted a free dive tomorrow, you probably want to learn how to swim first, right? So it's what in line with what Ben is saying. Education is paramount. You have to know how to evaluate a property, a commercial property, because all commercial properties are evaluated the same, whether it's multifamily or anything else. And so, how do you play with that, right? It's not just us counting on the comparable sales in the area. It's more about, like, obviously the income and the lower expenses and everything like that. So learn about the bones of investing first. You want to learn how to swim first. And so if you learn the basics, you can actually just keep growing bigger and bigger and bigger. Obviously, I'm a fan of starting small. I've always tell folks, start off with a fourplex, Don't start off with a house or a duplex or a triplex, because you're not going to experience that commercial valuation. You're going to have to do it with a fourplex and up, right? And so fourplexes are a very good way to get started. You have a lot of financing products. You have FHA, you have hard money, you have conventional, you have many different ways to skin the cat, right? And so if you know that up front, you can better structure your deals, right? Let's say that, it's very common to have analysis paralysis, right? You know so much, you're like, oh man, I gotta start off with a 100-unit complex. Yeah, I don't think that way. You know what I mean? Like, yeah, a fourplex is not gonna make you a rich man. Sorry, but it's not. But it will teach you a lot about the business, to the point that you're gonna feel more confident and scale, right? So you just kind of keep that scaling in mind, and eventually you'll get there. Yeah.
Absolutely. No, I mean, start, I would say do the fourplex versus not doing anything, right? A lot of people get caught up in, oh, it's got to be a 30 unit or nothing. I mean, just get into the game. You're going to learn, you're going to make mistakes, right? So don't think that it's all just going to go smoothly. It never does, right? But I'd much rather people take action and have that momentum moving forward than just to sit on the sidelines and think that they're going to time the market effectively. Oh, this is the bottom. Now I'm going to jump in and buy that 30 unit property or whatever it might be, or even the single family home. Doesn't really matter what it is, right? Just get into the game and you're going to be able to learn and adjust, right? And again, it goes back to having a good team, right? Those people that are on your team are going to help mitigate that risk, right? Because you're going to have lenders and you're going to have title people and you're going to have other people that are going to be a part of your team that might say, man, run away from that deal. Like, why are you trying to buy that deal, right? So they'll help you too, right? So, at the end of the day, I'd much rather you make that offer or buy that smaller deal than not do anything.
I'll add a little bit. Yeah. So to add to that, me and my friends, that kind of do the same thing. We have a little theory, which means is that you have to be a little dumb to do what we do. You have to, and it's okay. Because the thing is this, think about it. If you knew every single risk of driving to downtown from here, you probably wouldn't do it, because it's just so much risk, like the probability and all this stuff, right? And so sometimes it's about, it's okay to not be or you feel like you're not ready, but you actually, you are. So have a little confidence in yourself to get going. And obviously, like Ben said, you're gonna make mistakes, but hey, I'm actually 1,200 units deep in ownership, and I'm still making mistakes. So you're never not going to make any mistakes, right? So take that.
Just don't make them the same. Just
don't
make
make
the same
mistakes
time, right?
over and over again. And so if you just keep on going, and you have a little bit of faith, and then have that action plan, then you're good.
And you definitely need to find ways you can mitigate the risk to where the mistakes are less painful. Like, you never want to put yourself in a situation where, due to your own ignorance, which that will always be there, and your lack of really just kind of seeing things and game planning properly, that you get yourself in a bad situation. But I mean, like Boris mentioned, you're always gonna make mistakes. I made a mistake. I remember my first apartment complex. The biggest mistake I made was not partnering. I went lone gunman. bought this, it was a $500,000 loan, this 29-unit apartment complex. I think it was like 25 years old, and it was amazing. But I mitigated the risk by buying this thing so ridiculously dirt cheap. It was like $15,000 a door. 2012 prices. But ultimately I knew it was like, hey, I could still screw it up and make money. And I screwed it up and I made money. But you can mitigate your risk in different ways. And another way is, if you want to learn from the sidelines, you can be an investor. Whether you're investing, I know I wouldn't, like the 19 million over the years, the private lenders that have asked to go and see the house and see the progress, sure, like, I don't care. I'm happy to actually take those phone calls and spend extra time with them. And they're learning for free. Some of them have gone on to buy their own rentals and do their own stuff. Most of them stay passive, that's why they're loaning money out. But that's just another way that you can get involved without taking on all the risk yourself. Small apartments or large apartments? We touched on that a little bit, and there's definitely pros and cons to both. So let's hear it. Well, so Ben, you focus on large apartments. So what are some of the advantages that you have that you find with large apartments over small apartments? And then we'll tally back.
I mean, again, different flavors for different people. So again, not a wrong strategy or a right strategy, right? I think the reason that we probably go for a little bit bigger is, a couple different reasons, right? I can scale more quickly, right? And there's benefits in our organization to have a lot of assets under management. We have a property management company too, so the more units that I can manage, the better for the overall organization. Then you also get economies of scale, right? When I have 5,000 units that I can go, and I'll just use this as an example, a landscaper here in Houston, right? I can go bid out 5,000 units to the landscaper versus the guy that only has one property that has 20 units, right? Who do you think is going to get a better price, me or him? It's going to be me, because I can provide that landscaper with scale, right? Also, when you kind of get to a certain level, lending gets easier, gets even more competitive. Believe it or not, there's some lenders out there that will not go below $40-50 million loan, and your spreads, which is essentially the what they make on top of the SOFR or LIBOR or whatever it might be, it actually gets compressed, so you get better debt on a bigger deal too, right? Now, at the end of the day, there's disadvantages, right, to the bigger stuff, right? When you're starting off, you're not going to be able to raise $20-30 million. So that's a disadvantage in itself right there. So you have to kind of leg into that. Whereas maybe you could get across, a 29 unit deal, right? How much money did you bring to the table? Zero. All right, even better, right? So sometimes, that's a good thing when you're starting off. You're not going to be able to buy a big apartment complex. And my first one was 92 units. Actually, my most profitable deal that I've ever had. And the second most profitable one was 90 units. So there is some benefits in having a smaller property too, and I'm going to tell you why. They're less competitive, right? Because everybody gets into this business and they think that they need to have a bigger property, and so it becomes competitive in that kind of 100 to 250, 300 unit mark. That's the most competitive space, right? Above that, it's usually too expensive, so you only have the institutional guys. Below that, it's all the mom and pop people, and there's not a lot of those people there that you have to compete with. So there's an advantage of probably going a little bit smaller too, especially to start off with. But again, there's pros and cons to each of, it's really, what do you want to do with your investment goals? Is it, do you want to build a big company, or do you just want to have a couple properties that you manage on your own and you have cash flow? Then, okay, you're going to go about the business a different way than I have.
Sure. Very important points to the ones he made. I think I'm obviously a fan of small properties. Why? I can give you a lot of examples throughout my career where I made $250,000 on a 8-plex. Just last month, I was able to close and cash out on a property on a 4-plex, 1.7 million. How did I do it? Take my class. But yes, I'm here to tell you that smaller properties are way more manageable. The timing is awesome because in a 100-unit, and I do own a 100-unit complex myself, this is the largest one that I own, everything takes forever. It takes forever to rehab. It takes forever to refinance. It is easier, simpler, right? But with a 4-plex, you can get done in 3 months. like my student and friend here, Jay, he did it in super good time, and he's looking at a really good profit right now. So just because you want big profits doesn't mean you have to have a big property. That doesn't correlate. You can have big properties just by being creative and acquiring a small deal and maybe turning, you know, a 4-plex into an 8-plex and then selling that, you know, to increase the valuation a lot. Obviously, we're not here to get $1,000 a month, right? Which is what a lot of people believe. If I start making passive income, $1,000 a month, man, one day I'll make it. But really, what I've come to find out after years of me not only doing this, but studying my students and everybody, all my clients, is that it's actually really hard to get cash flow. And so what you have to like concentrate on is the big pops. The $250,000, the $500,000, the $750,000 checks in your pocket. That's what's going to change your life. And a lot of people, again, believe that you can only get that with a large property, but I've proven it time and time again, you can do it with a small property. So they're more manageable. You don't really need 5 years in a syndication to put in your money passively for 5 years. Maybe in 5 years I'll make $1 million. I want to make $1 million this year, next year, you know? It's time value of money, right? And I think that small properties will get you there faster.
One thing I would add though, you know, from a property management perspective, and this is obviously because I have a property management company, you know, it can be more problematic to manage those smaller properties, you know, so I mean, he knows this, right? You had to be on top of it. You're gonna probably be a little bit more hands-on. But when you're starting off, you've got more time, right? So that's not a problem. But just take that into consideration. Yeah, you might be able to get the rehab done more quickly, but there is that con of, okay, you know, I've got a 30-unit property, so can I have somebody that's gonna be there to collect rents, or maybe a part-time maintenance guy? It becomes hard to staff those types of things, so therefore you're more involved. And the more involved you are in some of these things, the less, it's gonna take more time out of your day to go and find your next deal too. So, you know, again, different flavors for different people, but that's been my experience. And that's one of the reasons why I've tried to go a little bit bigger, just to have professional management and actual staff on site that can go unclog the damn toilets and collect the rents and all that good stuff too, right?
That was actually my experience with the 29 unit, and that's why I vowed not to go that small. I don't enjoy the boots on the ground, like getting dirty. Outside of negotiating the deal, I actually like that part. Otherwise, I don't like anything else that doesn't involve a check. And property management never really involves much checks. I mean, it's in the process, but there's a lot of dirt you got to crawl through.
Oh, it's a thankless job. It's a totally thankless job, right? You know, it's just a tool in our tool belt, though, right? You know, and so that's the reason why we do it. It's not meant to make a lot of money.
But the good thing about the small multifamilies, they are easier to get into.
Oh, absolutely.
Now, like, so easy to get into a duplex, fourplex. Oh, I guess duplex is still more residential, but fourplex, quad, the 29 unit. I mean, that was no money down deal. I had a relationship with a hard money company. I had lines of credit and all that to fund the rehab and all that. But it's just, in hindsight, had I partnered with someone and not gone among the gunmen, it would have been a better deal for me. Because it was a smoke air. All my underwriting was right in that deal. I just made the mistake of thinking I could do it alone and should do it alone.
Chris. Ben and Chris were actually talking about like the management of it, the toilets and tenants things, which actually is a big myth. I mean, yes, you are, when you're starting out and you want a fourplex, you kind of want to find out what kind of manager you want to be, what a sheet of sheetrock costs, what tile costs. You want to know these things not because it's gonna make you rich, not because you're gonna squeeze out a few pennies from your bottom line, but because you're gonna learn about the business a lot. And that way, like what I was saying at the beginning was that can make you grow a lot. My first one, I started with an 8-unit complex, and yeah, I was managing the rehab and everything like that. But as soon as I sold it, I made $250,000, and I was like, okay, well, I'm gonna buy more properties, and I bought a 20-unit complex, and I had a part-time person that was management and maintenance, and so I kind of figured it out. I think that there's a big myth that you have to be there, you know, if it's a small property, sub 36 units, sub 40 units. I haven't really had that experience. I haven't managed a single property since since my first one, an eightplex, because I always kind of found somebody, either if you have to be creative about it. Like if you find somebody that's like, okay, let's share in the profit. If you give me, you know, so many X amount of dollars in rent every month because you're managing it, right? Then you'll get a bonus, right? And so there's different ways that you can actually get other people to do it for you. It doesn't mean with a small property that you have to find a full-time manager. That doesn't compute.
So we'll let this be the last question, then we'll open up to the floor. For those that want to be more passive, so they don't want to be in the trenches negotiating deals, managing properties, or you know, raising $20 million for the next deal. The passive investors, what should they be looking for before getting into in multifamily investing?
You know, I mean, I would say you're always looking for a track record, right? You know, I mean, everybody's a slick salesperson. They can throw up great metrics, and you know, you can sell the sizzle a little bit, right? But
so the pitch deck is not always 100%.
it's not always, and I've seen some really slick ones, and it, you know, once you dig just a little bit beneath the surface, you realize it's all BS, right? Like at the end of the day, you have to have a great team, and it doesn't mean this is actually a piece of advice for people that are starting off. Doesn't mean that you've had to have sold or refinanced 20 deals for anybody to take you seriously. You know, everybody started at zero. I had to talk people into my first deal, right? You know, why the hell would I invest with you? You've never even done this shit before, you know. But I'm going to tell you a key to success when you're kind of dealing, and at least in the syndication world that I'm in, right, is you can leverage other people's experience too, right? So the reason that people gave me $800,000 on my first deal was because I was partnered with a guy that had been doing it for the last 10 years. Right, so I leveraged his track record and his experience, and he was there to kind of help and coach me along the way, right? You know, so you have to kind of take that into consideration when you're kind of coming at it from a passive investor standpoint, you know. But also find out what your box is. A lot of people are just they find out about it and they get all excited, and then they just throw their money into the first person that throws them a deal, right? You know, don't do that, right? Figure out what market you want to be in. You know, what type of product you want to be in, how long you want to have your money tied up in, right? Because there's projects that are, you know, short as maybe a year to up to 10 years. Actually, shit, I've seen stuff that's longer than that, right? You know, so you need to be very, very aware of like, okay, I want to be in Houston, I want to buy, you know, a Class A property, and I only want to have my money tied up for 5 years, right? And I want to have these types of returns. Like you can, yeah, it might take you a little bit longer to find that deal, but at least you know what you're getting yourself into, right? Instead of just throwing money at whoever throws you a deal. So I think that that's important from a passive investor standpoint, right? You know, look at the track record, ask the questions. This is your hard-earned money. You know, I mean, we have a lot of Quest investors on our deals, right? You know, this is the retirement funds. You know, you're entitled to ask a couple questions, right, about somebody's track record or about the deal or about the market, but also, you know, getting yourself educated and understanding what you're investing into and what you want to invest into is important too, right?
Okay, so obviously, you know, I don't take any passive investors. I don't, you know, pitch any investment on deals that I have. So what I do want to say though is, if you're thinking about passive investment, just please ask yourself, could I do it better? I know I have a full-time job and I'm an engineer and I don't have any time, but is there any other way that I can own real estate, right? Have the depreciation and go through a forced depreciation and everything like that. Just ask yourself, how hard can it be? And if the answer is still you're not going to have any time, you're not going to be able to do it, then obviously passively invest. You got to at least do that, right? If you want to start generating wealth, is, you know, invest it with a really good team like Disrupt Equity. You know, again, one of the biggest and best companies to invest in. I always said that if I was going to invest passively, it would probably be with them. So, yeah, definitely but at least ask yourself, like, okay, do I really just want to leave my money tied up for years on end, or could I get to my goal a little faster if I just actively invest?
And so, do you work with private money lenders?
Yeah, so I work with hard money lenders that let you borrow up to 100% of the cost of purchase and rehab. So that's zero down. All you bring to the closing is your closing costs, right?
So there's by passive investors, there's really two ways you can be an investor. It's either equity or debt. Now Ben's probably primarily on the equity side, where you're raising money from folks that they're essentially business partners, passive business partners. And the 19 million that I mentioned earlier, most of that has been raised, that I've raised for the flips that we've done and our rentals, has been primarily debt partners, folks that we had to buy a deal. It's going to be $150,000 plus another 50 to rehab it, and they gave us 200,000, and it was going to be worth 350. So just keep that in mind.
And I think maybe we make a distinction between, I mean, I don't know who's all tuning in, right? But obviously equity, they'll get sometimes they'll have some kind of cash on cash, expectation. So if they put $100,000 in, maybe they'll get 10,000, but they share in the upside, right? Which is the refinance and the sale proceeds versus if it's debt, which we've kicked around too, and we can probably structure our deals that way too. And I actually know syndicators that do it that way, right? Where it's essentially, they're getting a second lien on the damn thing and they're getting their 8% coupon every year, right? But they don't get any participation in the upside. So there's a distinction between the two, and I wanted to make that because, how you structure your deals, could make or break the deal first and foremost. But it's also, you need to know that going into, if you're gonna raise money or structure, even like you said, even flips, right? Knowing how all that works is important. So I just wanted to make that distinction.
Yeah, it's all risk-adjusted returns.
Yes.
And you become more attuned to it as you look at multiple opportunities and see what folks are offering out there, and get more educated in the different assets. So let's open up the floor.
Who's got a question? Come on.
Who's got a question?
Oh, don't everybody raise their hand all at once, right? We did not just answer all the questions. I'm almost positive.
All right, well, let's package this up. Yeah, go ahead. I'm going to repeat the question for folks watching online.
What would be the best way to find deals?
What's the best way to find multifamily deals?
He can sniff them out.
Let's clarify a little bit. You talking about small multifamily or large?
Either or,
Okay.
could be both. Of course, for both, because you guys focus on different sizes.
Okay.
So.
Right.
No, I think there's different strategies. So yeah, maybe you want to take this one first.
Yeah, sure. So that's a very good question. Where do I find the deals? I would say, if I was gonna give it any secret sauce to me finding deals, would be just that I don't give up on any lead. I will follow up on the guy who maybe heard that his cousin has a little multifamily unit. You would be surprised. I have bought from those folks. Daisy chainers and wholesalers have sometimes a really bad rep. I buy from those people. I buy from the guy that's too loud and he's out there a lot. I'll buy from them. And so because I'm out there so much, and because I tell everybody that I meet that I buy apartment complexes, then and I'm willing to share in any fees or any finder's fees and stuff like that. Then obviously you can you can better get deals directly to you. And that's literally the way I get deals right now. Is yes, through our own marketing, but through referrals, we get an awful lot of referrals, and so yeah.
Yeah, and I would say we always look for that too, right, if we can. But for the most part, we're probably doing it through brokers, which is essentially a real estate agent. I don't know why. For some reason, in commercial, they're all called brokers, even though they're all agents. That's just typically 90% of the deals, call it 100, 150 units and above, are going through that kind of process. Right, so they'll either off-market a deal, right, where they're not email blasting it out to their whole entire list, but they'll call 10 or 20 groups that they know might be active in that market, and they'll actively solicit a bid. Or the seller will say, no, I want you to blast it to your whole list, and then we can kind of go through that process, and that's where you kind of get into this feeding frenzy where everybody's chopping their legs off to win the deal. That's not as much the case now because we've thinned the herd over the summer, but that's typically on the larger properties. Again, 90% of the deals are getting done that way. But what's been great about buying from some of these bigger groups is it's opened up that dialogue directly with some other buyers and sellers, right? So we'll take them out to dinner. We'll say, hey, what else are you working on? What else? And they're trying to actively buy something from us, and we're trying to actively buy. So that also happens too, right? Just through the sale process. And I thought that was an interesting thing this last couple of years that me and Ferris started kind of really taking seriously. You know, is like, hey, let's have a dinner with
whining and dining.
Yeah, the whining and dining. Not much of the broker. Yeah, I mean, they should be whining and dining us. We just pay their fee for the most part. But it's mainly the sellers. They're selling to us. Let's take them out to dinner and see what other projects they have that they might want to be offloading too.
So they both said networking.
Yeah.
It's networking.
It's relationships again. It all boils down to relationships. And I'll tell you, the brokers really, you know, they sell to who they like, know, and trust. And right now, I mean, they're being extremely picky because the market is somewhat shifted. So they're only going to the people that they know or they think can close the deal too, right? So, you know, it's kind of challenging to get in right now if you're new to it, trying to buy some of this bigger stuff because they're afraid that you just might not be able to close.
Yeah, surety of close is huge, and Boris could probably attest that wholesalers are the same way. They got a deal, like wholesalers, they don't make anything unless they can find a buyer. And when that buyer backs out, man, they're faced with some awkward conversations unless they can get it moved. And if you can be that person that they know you'll close, probably going to give you a better deal.
Yeah, I would say, look, one that may not have, a style that may not get talked about enough is MLS, HAR, or you know any other city's multiple listing service. I have made a lot of offers based on intelligence, right? I don't just lowball people. Look at a property that's been on there for 70 days or whatever. I will actually tell them, look, this is why you haven't seen any traction, and so because of this, I'll draw out the pro forma and I'll draw out the NOI and why they should be worth less than what it is, and I'll go and make that offer. Is that a lot of people just don't make offers because they see the property as too expensive. You will never know. A seller might be in dire straits and will take it right away just because you were the first one to offer it. And so yeah, just making offers in the MLS is great, and it's a great practice for growing bigger and everything like that. You're gonna talk to a lot of brokers, and that's okay. You want to get that fame that you buy apartment complexes or commercial property, right? So that when you get to Ben's level, everybody kind of knows you already.
Yeah, that's true. Absolutely.
At the level that you guys are at, you guys are mostly rehab or mostly new construction? As somebody that starts off fresh or new, is that something viable to do new construction, or would you tell them to keep?
I mean, again, I think it's.
I'm going to rephrase the question for the folks watching online. So basically, do you entertain or do you look at new construction opportunities as opposed to the value add or fix and flip type?
I mean, obviously, value add has kind of been our bread and butter over the years. We're doing 3 new construction deals right now, just here in Houston. Because we want to kind of keep an eye on it. But just getting in on the business, I don't know, man. I mean, I think you'd probably want to have a development partner that would know what they're doing because, I mean, there's just a lot of nuances to that process and you're going to get jammed up. It's probably the quickest way to lose some money. That's why you have these people, whenever the market shifts, a lot of these developers get screwed because they're not far enough along in the process, or their lender backs out or their equity backs out. I would say probably going more bread and butter, value add. You can get a general contractor in there, which there's a lot of them here in Houston. Might be a better way to kind of start off, but again, I'm take it for what it's worth. I think it just depends on your experience level too, and what you might have done before that too. Because I know a lot of construction guys that get into our business too. So I mean, then think about that, right? They've got their own crews, they can build stuff. All they have to now find out is how to finance it and how to bring the money to the table. So some of those guys, I mean, there's a company called S2 out of DFW. They're one of the biggest buyers in Texas, and he was a construction guy. So that was pretty smart move on his part to get in. He saw he was making money for all of his clients, doing all the rehabs, and he's like, well, shit, I could do the same thing. And now he owns like 25,000 units or something stupid in Texas.
Yeah, I would say doing a lot of background on what it's going to actually take for you to actually get this built. Do you have the right zoning? I know there's no zoning here in Houston, but like in Austin, I'm doing a development out there. There's zoning.
Yep.
What do you have to do in order to meet that criteria, in order to build? And so doing a lot of background is very important. Again, knowing how much a sheet of sheetrock costs, or how much per square foot is going to cost you to actually build these out. And sometimes you'll be surprised. You will actually come up cheaper than buying a complex that's rehabable, right? And this is normally in Class A areas. I think Class C is already kind of depreciated and stuff like that. But if you're looking to buy in a Class A area, it may just be that you can build a small multifamily or something like that instead. There's also, I'll give you guys another tip. In the city of Houston, you can own a complex of homes and rent them out, and that will be known as multifamily, right? And you can get multifamily financing. You can actually have up to 2 units per lot and still have residential, meet residential code for the city of Houston, so that way you don't have to have the sprinklers and the open garage and everything like that you would need in commercial. So if you, let's say you find a plot of land and then you just kind of divide them up and then put a house or a duplex in every single lot, and then you keep them all for rent, you've essentially built a complex for much cheaper than it would cost to actually build commercial.
Yeah, from follow up on his thought, and there's some macro thoughts there too. I mean, ultimately, there's a ton of gold with new construction. We have low inventory. Like, if someone can solve at a profitable and be profitable and build, the money's there. But they haven't been doing that fast enough.
Well, the construction costs have gone up 30% in the last,
there's so
12
many,
months too.
There's construction, there's labor, there's supply chain issues, but even before all that, then there's still financing for new construction. Then depending on the city, you got permitting.
I wanted to touch on something though, because you just really, and I don't know how we both missed this earlier. So one of the reasons why we love just housing in general, right, is this because there's a freaking shortage of it, right? You have more and more people moving to Texas. They're not keeping up with the amount of demand there is, and that's why rents are going up. It's a purely a function of supply and demand, right? And like you say, the builders aren't building anything. So that's both on the multifamily side as well as the single family side, right? Because the builders are real skittish right now because they got whacked in 8, 9, and 10, and so they didn't want to be left holding the bag, so they pulled back too. So that just leads to more and more pressure on rents, right? So if you can solve that problem, or you already an existing landlord and can get into that and kind of ride that wave, that's another fundamental reason why I love multifamily, is because we're providing housing and there's a shortage of it here, right? And I think that's an important thing that people need to take away from tonight's webinar.
Yeah, and it's easier to solve that at the lower level, like if you're building a duplex or a quadplex. I mean, it's simpler for a single person or a small team to take care of that. Or storage container units. I'm about to put one up in Galveston.
Well, this guy's got storage too, man.
Yeah.
Pivot into storage, man.
Talk about that.
Yeah.
So, I mean, but then again, new construction, there's no cash flow. You're not making anything until it's completed and either rented it out or sold on the back end. That's the problem. But from a macro standpoint, I know new construction for single family builders have pulled back. With inflation going up, they pulled back. It's like 20, 30% or something year over year.
Yeah.
So they're pulling back hard, and they're already behind schedule anyway. Multifamily has actually been pushing it forward. They're at a 50-year high, which sounds good, but really what that tells you is like we're building what we're doing now, like we were 50 years ago. That's good. We need to be building more, but they're still way behind too. So ultimately, there's just a lot of demand. They're just not building enough, which, again, people got to live somewhere. So if you own it, you're going to take advantage of that. Another question. Yep.
Yeah, you were mentioning the way to find deals is to like network. So like when you guys were getting started, like how did you build your network to know who you can trust and who you can connect with?
Tips on networking. How'd you build your network?
Yeah, no, I mean, obviously, trust is something that has to be, built up over time, right? And there is a lot of scammers out there. So, I mean, obviously take that, into consideration. But, you just got to get out there. You got to ask for referrals too, right? Who's doing deals, who's the right outfit, and the same thing with passive investors, who's actually putting money, because there's a lot of people, oh, yeah, I've got some money, and, but they're really just tire kickers, right? So if you're looking for money, again, you have to get out there and you have to look around and kind of sniff out the right people and ask for referrals, right? Same thing if you're looking for deals too, right? You have to look and, ask for referrals of who's bringing the right deals, who's got deal flow. But really, man, I stumbled my way into it. I networked, like there was probably 4 nights out of the week I was going to a networking event. I was just blowing through business cards. I was doing a lot of follow-up, you know, and you can kind of, I was a sales guy for 15 years ahead of that, so, you know, I can always kind of sniff out people that are bullshitting me. And, you know, that's a skill that I have. So you're going to have to kind of, you know, probably kiss a few frogs before that. But the point of all of that is that you need to still go out there and get it done. And I know there's some nights where I'm like, shit, I just want to stand in the corner and, you know, scroll on my phone and not talk to anybody. Trust me, I've been there, you know, and I don't consider myself an overly extroverted guy, even though I'm up here on stage, right? This is taking time to build up to this. But my point is that just get out there and make it happen. Right? Because you have to take action, right? And that first step is to get out, get educated, get networking. Then you're going to find the right deals and the right opportunities that you can then start making offers on, right? And then you can get some momentum. And I'm a big proponent of it in this business, right? If you got that wind at your sails, the sky is the limit. You know, once you stop and you get out of the game for 6 to 12 months, which was the biggest mistake that we made during COVID. You know, we weren't buying during 2020. It was the stupidest thing that because we thought the whole damn thing was collapsing in on itself, right? And the people that were still buying in 2020 and into early 2021 made a fucking killing. You know, then this guy in the back, he's like, that was me. I was making a killing.
Picked up so many deals.
I know, but
dropped.
so the point I'm trying to make though, right, is like, don't stop, right? You know, even if you're just like, okay, I don't feel like doing it, just go out there. It's like working out. Out there, network, pass out a couple business cards, do the follow-up though too. It's not about collecting a business card deal, right? You need to do the follow-up. You're like, man, those conversations were pretty valuable. I actually need to call those people. Do the follow-up. It's important, right? And that's you're gonna learn the good people, the bad people, who to avoid, who to do business with. If you follow those, right?
Yeah, I would echo some of that. I mean, obviously, that's common ground that we both have, is we agree that networking is the way to go. Like I said earlier, telling everybody what you do, what you're buying is, you know, there's a lot of power to that. I'll post a lot of social media about, you know, yeah, with the memes and stuff like that. I also post some meaningful things, that, you know, they'll say, hey, look, you know, they'll tell somebody, hey, look, I'm still buying multifamily, I'm still buying commercial. And I'm getting a lot of deals. Facebook groups is a huge one.
Yeah.
And there's a million of them. There's a lot of Facebook groups. Don't just go in there and just join one. Join them all. And well, I mean, yeah, you're going to have it kind of, your newsfeed kind of cluttered, but you kind of want it that way, right? I think that Facebook right now is just mainly for business. I'm all in the Houston, in the Texas, in the, you know, countrywide forums where people just post up deals. And yeah, I've bought deals from this guy in Memphis that has a deal in Houston, you know, that he's trying to offload very cheaply. He got lucky with a seller, and so yeah, I'm very resourceful when it comes to actually finding these deals. Like I said, I don't not chase down any lead, even if it seems kind of weak.
Yeah, and the online and offline, they merge too, because like Boris was talking about, going in these Facebook communities, I've recommended that in the book Jamie and I just came out with. So it's going in and engaging. Don't be a lurker. Actually engage. So my strategy there would be, I would filter by post, because usually it'll filter by either relevant or newest activity, which newest activity may have like 50, 75 comments or whatever in these big groups. It doesn't mean that you may not want to chime in there, but I would filter by post, because then you're going to get a couple of the freshest posts that maybe only have 0 to 5 comments. So the likelihood if I post my 2 cents, this is the 2 cent strategy, then you're probably going to get noticed, and they might even comment back. If you give some good value, they might comment back. Asking things, ask thoughtful questions, whether it's your own question or if you just want to stir up discussion in the group. So, but ultimately be engaged, do not spam. Do not, hey, I'm trying to build my buyers list, blah, blah, blah.
No, and I think what we're trying to say is like there's networking face to face, and then there's also some networking, especially in this day and age, online too,
Yeah.
right?
Well,
You know?
so what I was going to tie that into is the offline. So now when you go to a networking meeting, hey, I've seen you in the Facebook group, yeah, or hey, you answered my question, I really appreciate that. So now that connect, it's like, it'd be like dating, but starting now, you're on the 3rd date. Where you actually already have that connection, you already know each other, there's some past communication that's already happened. But even beyond that, the face-to-face, it's just, you're going to get it's more impactful. Any introverts in the room? Like, I'm an absolute introvert, so I hate networking. I really do. I like COVID, being at home all day.
You're like, yes.
Loved it.
loved it.
Loved it.
We were still online.
You're still alive.
I'm still online, but I mean, here we are doing these because I realized they were very impactful for my business. So, but if you're not hosting events, which is really easy to do, and you can do small coffees with like 5, 10 people or bigger events. But if you just want to go to events, I would pick. I would go in the beginning. I would just go to all of them, and then you figure out the 2, 3, 4 that you like, and then you start seeing the same people. Now, the same people, those are usually people who are actually really active in the business. So they're probably not newbies, they're doing some business. And I would always go with purpose, meaning I had 1 or 2 questions that I was going to ask, and it was probably the host I was going to ask, or someone I knew would be there. Only 1 or 2. If you ask 10, they might run away from you next time they see you going. So keep it to 1 or 2, and leave it at that. But you do that consistently for 12 months. Like, how many questions you get answered? 10, 20 questions from someone who's super experienced for free. Actually, more than free. They probably fed you. It's a strategy. So do both, online, offline, let them merge, build relationships. Like Ben said, follow up, build that database, and provide value. You provide value, that stuff comes back. So I think that wraps it up.
Wow. Wow. All right.
Any final thoughts? Do you have a final thought there?
No, I think we touched on it a lot. I think, you know, the thing that's probably similar between Boris and us is we took action, right? You know, and I know you're sitting there like, well, maybe I don't have enough money, or I don't have enough experience, I don't have enough education. I didn't have any of that stuff when I started off either. So, you know, just know that everybody that you look up to or you think is successful, they all started with 0. Right, you know, and so it's important to get yourself educated and take that action. If you got anything out of tonight, that's what I wanted to drive home tonight.
Yeah, I probably would say that just think outside the box when it comes to investments. I spoke about creativity and rehabbing and financing and everything like that. That normally means that you are very educated, right? So education leads to better deals in that regard. I would just add that you know, kind of like what Ben said, is take action. Don't just get the analysis paralysis, or you just, it's too risky, blah, blah, blah. Just start. I would even, if you're too, not scared, but maybe afraid of actually buying a 4-plex or a 10-plex, start with a house. A house will actually teach you a lot about construction and management and everything like that. Yeah, you won't have the appreciation and everything like that we've been saying, but at least you took action and you started off with 1. And I can guarantee you, after you're finally done with that one, you're going to be ready for, okay, maybe I'll just take on maybe a duplex or whatever. You can start off small and build up. It's not a race. Just because your neighbor is doing it and is doing it 20 times faster doesn't mean that it's that's the only way, right? And so that also goes in hand with thinking outside the box. Just because somebody is saying to you, oh yeah, come and invest all your money in multifamily, doesn't mean you have to go multifamily. There's many different ways you can do. You can invest in commercial real estate. There's storage, there are warehouses, there's office, there's shopping centers. You know, if again, it goes back to you just being educated on every single asset class, so you can better structure them and become more profitable.
Yeah, ultimately your real estate investing journey, it's a foggy road. You can only see maybe 100 yards in front of you, but once you get that 100 yards, you can see 100 more yards. You can see 100 more. That first deal is always the hardest, whether it's single family or multifamily. Mitigate risk, get educated, and find ways to get involved. And if you don't want to do any of the active stuff, or maybe you try it and you hate it, there's still passive. So either way, you got to get in the game, you got to play it. So thanks for coming, appreciate it. They'll hang around as long as they want to hang around. I'll hang around for a little bit, but otherwise, yeah, thanks for coming.
All right.
Thank you.
Appreciate it.
Yes, sir.